You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back. It is Education Wednesday once again. That means it's time for a little bit of the old Options Boot Camp, what the cool kids call OBC. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are mainlining these days. A couple of things to remind you of quickly here at the top of the show. First off, if you're just listening to Boot Camp, man, you are missing out. Nearly a dozen other programs coming at you, including a lot of great educational content. Options Playbook Radio is sitting there waiting for you. On hiatus right now, but we're working on bringing that back in maybe some new OPR 2.0 fashion. So stay tuned for that. In the meantime, hundreds of archives episodes ready for you there. Very much a sister show to this one. So if you like educational content and you're tuning into this, so I'm assuming you do, then OPR will have you covered. These two shows going back over a decade for both of them pretty much. So a lot of great content waiting for you there. Of course, if you do like what you hear, whatever outlet you're getting it on, it's available on just about every podcast outlet on the planet these days. Throw a like, a comment, a star, whatever your platform lets you do. All of that does in aggregate help new people continue to discover the content. We all know there's new people discovering the world of options all the time. This week's 5-star review comes from Sans Cats with a Z and a K. So not sure what he's going for there, or perhaps she. Maybe they just don't like cats. Either way, they say, learned all about options from listening to this show. Going back again to start at episode 1. Wow. It's an impressive level of commitment, Sans Cats. And also starting, so they're doing both. Again, sister shows to each other, so you should be checking out both if you're not. But thank you, Sans Cats, and everyone else who takes the time out of their busy days to rate and review the content. And also joining me on the old program today, my old friend, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P, welcome back to Options Boot Camp. Sure.
It is great to be back, Mark. I'm excited for today's show.
Yeah, we got a fun one in store for us because we're mixing it up a little bit, listeners. We are joined by a third person holding down the tastytrade hot seat. on the show this week. Yes, it is Jermal Chandler, the head of options strategy over there for tastylive. Jermal, welcome to the Options Bootcamp program.
What's up? Man, first of all, I'm a fan. I've always been a fan for a while, Mark. Yeah, I love the way you do the show. It's great. I'm glad you have Dan coming on, too, as well. I mean, this is, what more can I ask for?
Good times. I'm sorry you have to slum it with Dan. I apologize in advance, but, we'll make do here on the show. Jermal, you say you've been listening for a while. You've been on our network once before, I believe it was our Volatility Views show, but it has been quite some time and never on this program. A lot of new listeners come into this show all the time. So let's kick things off as we are wont to do with a lot of our first-timers. Give our listeners a bit of an overview of your background in the world of options and derivatives, as well as what it is you do over there in Tastyland.
Well, it's a long story, but just to be brief, actually, we did a little story on me recently, which is, kind of embarrassing. It's always weird to see your life in front of your eyes. But the thing that seems to resonate with people about my story is that I didn't start in this industry right out of college or anything like that. I didn't do anything in college related to finance. I was actually a chemist undergrad, and I did an engineering degree for a master's. And that was my background for a bunch of years. And then I finally kind of got tired of it. And as I like to joke, I threw it all away and decided to learn how to trade options. It just so happened it wasn't that big of a shift as in going from being a graduate student to becoming an options trader. And I worked at a prop firm in Chicago, Peak 6 Capital Management, and I ended up working there as a trading assistant, learned the ways, and eventually got a portfolio and, messed around, did a few things here and there, mostly traded equities. That's pretty much all I traded there. But I learned a lot from a lot of smart people. And then
right at the end, right when it was getting interesting. That's the magic of telephones sometimes, listeners. I tell you what, Dan, we'll move on. In the meantime, I will see if I can get him back. All right?
Sounds great.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the Mail Call, the portion of the show where we tackle your questions from all comers. I think we've got everybody sorted out again there. Jermal, are you back with us, sir?
Yep.
Are you there?
I'm back. Sorry about that.
There
guys.
he is. I could tell I liked you early on. Similar origin stories. I started in the dark arts of chemical engineering myself before I was lured to the dark side. I was lucky. I saw the light a little bit earlier than you. I ended up switching majors at school, but I got lured to the dark art of options, and I never looked back. But I could see wanting to move on from the green pastures of all things chemical related. But a lot of fun here on the show. Welcome to the Mail Call, listeners. Of course, the portion of the show where you folks take the reins. Jermal will give you a pass this week. This is usually, you'll come armed with an insightful, very interesting question from your folks over there at Tasty. But you know what? We sprung it on you last minute, so I'll give you a pass this week. But next time when you come on with the boot camp, sir, I'll expect you armed to the teeth with all sort of insightful and perhaps surprising, head-scratching questions from the folks over there at Tasty. In the meantime, though, Mr. Dan, I know you've been waiting with bated breath for your opportunity. You're out there also tackling a lot of great questions from the folks in the world of options. What are the mentees up to over there in the land of MTM? What kind of questions are they throwing at you these days, sir?
Yeah, it was pretty funny. I was doing a one-on-one coaching session today, and the student that I was working with asked, we're just going over some trade, and I was looking at it, and I was like, wow, this volatility is really cheap. Wow, the stock really moves around in a big range, and just kind of stumbled upon a straddle trade that we weren't even looking at. And she asked, do you just kind of stumble on trades often? And I was like, well, I won't go as far as saying super often, but yeah, it does happen. And it's kind of cool when it does.
I will say, not the first person to come on here talking about long straddles these days, which gets me intrigued because, A, we're in a low vol environment. And usually when we're talking about long straddles here on the network, you could tell markets are exploding. We're moving 2+% in the S&P a day. We're not quite in that environment right now, yet people are having some interesting success with long straddles. Again, in select environments. Most recently, we were talking about them in small caps, but intriguing stuff out there. Maybe that's an indicator in and of itself, listeners, when we're talking about straddles here on the network. Perhaps things are intriguing. Speaking of things we're talking about, let's start paying off some of our listener questions we've been asking you folks on the show. including our most recent question from our most recent show last week, listeners. We asked you folks, this is kind of a corollary to our how cheap is too cheap for options trading. I'd love to get Jermal's thoughts on that in a second as well. But our question last week was, we've seen a lot of upside call activity in Ford lately, including the June 2025 935 calls, a weird strike, listeners. A paper was buying those for 2.25. March 10s trading for 72 cents. All of that with Ford well sub $10. I haven't looked at it today. Maybe it's back north of the 10 handle now. But at the time, we thought, with Ford trading right around $10, would you still buy Ford calls, or would you rather just buy the stock? I gave you three choices. I'm all in Ford upside calls for life, or I prefer the stock below $10, or a fun third one, I prefer Tesla. And over half, 54.2% of you chose you prefer the stock below $10, which is very much in line with what you guys voted on our poll a couple of weeks ago about how cheap is too cheap. And a lot of you said the cutoff was $10. That's where you stop trading the options and look more towards the stock. So this poll lining up with that very nicely. Right behind it, 29.2% saying you're all in Ford upside calls for life. Only 16.7% of you saying you prefer Tesla, which is interesting. Jermal, you weren't on the show with us last week, but I'm curious to get your thoughts on this. It's a very subjective issue. If you ask 10 different options traders and educators, you might get 10 different answers. But for you, Jermal, where is the cutoff? Or maybe if there even is one, when you're looking at stocks starting to get cheap, below $10, below $5, where do you tend to draw the line when it comes to trading the options versus just trading the stock?
That's a really good question. I mean, just to answer the Ford one, honestly, I guess I'd probably prefer stock too, just because Ford does have a dividend, right? Like I think that's one of the main reasons why a lot of people have always liked Ford. And since it's so cheap here, cheap relative, right? I'd probably prefer the stock so you can also collect that div. And then maybe eventually get to doing a strategy, which we're going to touch on later. But the cutoff for me, that's a good question. I mean, I don't know. I guess it all depends on what's going on with the options too. Like if I do see something that I like as an upside play and I do see a lot of options activity and it's a name that's moving, I'm probably going to be more inclined to do the options. And I would say I probably up to about somewhere between $30 to $40.
Oh no. They got to pay their internet bill over there in Tastyland.
Man.
Well, Mr. Dan, while I work to get him back, why don't you regale us? I know you said in the past you don't really have a cutoff, but for you, sir, are you surprised by our Ford poll? What are your thoughts?
Yeah, I mean, like me, I've owned Ford for a while, and I wish I could say that I would like to buy it here. If I didn't own it, I probably would. So I'm not going to sell it here. But, there is the thing about, calls are insurance policies. You're insuring yourself against being out of the market. And you can go and buy like the 30-day 10.5 strike calls, just 40 cents out of the market. And you can buy them at like 19 cents, like pennies. That's like you're risking 2% of the stock price. And if you get a reasonably big move, like all the strike stuff is done and, they have some good news or something, you can get a nice, you can think of it as a nice, really leveraged profit, but you can also think of it as, hey, I'm just paying I don't want to risk further downside, but I'm going to pay this little tiny 2% risk. And I get to participate in the upside if it really takes off.
Yes, we also had a fun flash poll last week. It was spooky season, Halloween season, so we thought, listeners, we'd ask you, what is the spookiest sounding, what is the scariest sounding option strategy? Gave you three choices: Iron Condor, Iron Butterfly, or the infamous Strangle. And as expected, the Strangle took it 59.1%, 27.3% for Iron Condor, 9.1% only for Iron Butterfly, and 4.5% for the infamous other. But let's get out to our question of the week from this week. An intriguing one, kind of hitting on the topic everyone seems to be obsessed with these days. It's all things 0 day. So we thought we'd ask you, everyone's obsessed with these things right now, but really, at the end of the day, how are you using them? I gave you four choices. You're using them for income and premium harvesting, so you're selling the old risk premium, listeners, or you're using them for short-term hedging. Maybe an earnings event is coming out, you want to buy a put on it on that day, or you flipping the coin, short-term spec. Maybe earnings coming out, you want to roll the dice to the upside, whatever the case may be, or you don't touch them at all. I do believe we have Jermal back. Jermal, sir, well, before we even get to the poll, really quickly, are you caught up with all things 0 day? Are you caught up in this frenzy? Are you all in on them, or are you maybe a little bit lukewarm? And then B, what do you think our audience is choosing in terms of their preferred use case?
Well, hopefully I don't get punked again, A.
Got to pay that internet bill over at Tastyland, sir.
Yeah. I find them useful for different situations. I assume when you ask, you're wondering if I'm one of those people who is basically trading like a lot of those different like SPX options and weekly, 0 day SPX condors, things like that. I don't really do that. I certainly have used them around earnings in different ways, right? Like maybe selling some upside and or doing a diagonal to buy further out, things like that. So,
oh goodness gracious.
Yeah, they're not liking him over there. The internet gods not smiling upon him. Well, Mr. Dan, I know how you fall on this one, sir, as our poor producer is working diligently behind the scenes to try to get Mr. Jermal back in the hot seat.
I don't even know what's going on.
We got to get you hardwired next. We got to plug you in or something next. We get you in the studio. I don't know what we have to do, Jermal. All right, you were saying you weren't that hot on all things crazy 0 day. Let's finish that thought before we lose you again, sir.
Yes, please. So no, I don't mind using them. I'll use them in different ways. Earnings is one example where sell some upside and maybe buy further out like a diagonal, but I don't use them a ton, right? I'm not one of those people who die hard use them every single day. I'll use them when necessary. And then what was your second question? Remind me.
What do you think our audience is voting for in terms of their use case in the poll? Are they using them for income, short-term hedging, short-term speculation, or they don't trade them?
I would imagine short-term speculation would be one of the main answers.
Okay, Mr. Dan, same question for you, sir. We talked before. I guess you're kind of in Jermal's camp a little bit. You see the value in them, but you're not super hardcore. You haven't transferred all of your trading to 0 day either. So where do you think our audience is falling right now? How are they using these things?
I personally kind of see some overlap between income/premium harvesting and short-term speculation.
We do not allow that for purposes of our poll. They are strict lines of demarcation. They shall not.
Yeah. But I think that is that is a popular use of it to just speculate on. Hey, it ain't going to move that much. Line in the sand. If it doesn't cross it, I win. But yeah, I don't know. Seeing as I see some overlap there, I think I'm going to say short-term speculation because I do know from some data I've seen recently that people are both buying and selling these short-term options. So, short-term speculation. That's what I say.
Interesting. You're agreeing with Jermal, and you're both wrong. Our audience, the ultimate arbiters, actually might be a little bit of a surprising result. I've seen this with polls we've done in 0 day in the past. Our audience, obviously a little bit savvier, a little bit higher up on the options knowledge spectrum, and they are a little bit skeptical of all things 0 day, which is interesting. Right now, 44.7% of the audience saying they don't trade 0 DT. They're just not touching them, which is fascinating in and of itself. Followed by number 2, income premium harvesting, 28.9%, 15.8% for short-term speculation, and then bringing up the rear, some might argue the purpose for which they were intended, short-term hedging, 10.5%. So, wow. Again, it may sound surprising. I know our audience a bit, so I was kind of expecting you to maybe lean on that side, but still may surprise a lot of people who hear just nothing but 0 day all the time, and they see the volume numbers. They know people are trading them. If you haven't voted yet, you got about till the end of the week, listeners. It's a question of the week, after all. At Options on Twitter, the place to go to make your voice heard. A lot of our listeners chiming in. Our pro member, Age of Delaquare, saying, I was the kid who understood not to play with matches. As an adult, I don't touch 0 DTE either. Well, but clearly you're not alone, Age, unless you voted 100 times. I don't know, to skew the numbers somehow. Either way, you're clearly not alone. A Red Engineer saying he likes out of the money 0 days to expiration SPX butterflies. A lot of interesting stuff. Get there at Options to make your voice heard. Let's get into some more of your questions. Let's go here to Brachus. That dinosaur? Brachiosaurus is what I'm thinking. Maybe he's thinking of the Greek god, a little bit of play on that. Bacchus, he's adding an R. Either way, Brachus, I like the handle. He says, great show. Thank you. Says, just coming to grips with all of these options things and looking at chains for the Apple and Meta right now, and damn, he puts in all caps. There are a lot of options on them. Yes, there are. Maybe it's a dumb question, but where should I start on these chains? If I go close, they are cheap, but that doesn't give me much time. If I go longer, they are freaking expensive. I'm mostly looking at buying at-the-money calls or approximately 2 to 5% out-of-the-money call spreads. Where should I be looking? All right, Jermal, we got an interesting one here from the interestingly named Brockus. He's new to the world of options, like a lot of listeners to this show are, and he's starting to dip into Meta and Apple, and he's kind of overwhelmed by the literal legion of options he's confronted with in those options chains. He's looking to buy premium, at-the-money calls, or verticals. When you have someone in this scenario, where do you typically recommend they start looking for their trades, sir? How far out should they go?
Perfect tailor-made question, especially for a tastytrade person. We're always looking at 45 days. Now, we're often option sellers, but we're always looking at that 45-day time window, mostly for decay. But this person's looking to buy, right? So they want to make sure volatility is fairly low. On our platform, you can tell that by looking at implied vol rank. And I would say, it depends on, what they really want to do. They express the desire, sounds like, to buy calls. But if, like, say, for example, they wanted to buy a call spread, you could get your probability more closer to 50%, which is basically like.
Oh, man, I was just getting good.
The internet gods, they are not smiling upon him just when his answer starts getting to the meat of it. The internet gods not smiling on him over there. Okay, I do believe we have you back.
I'm not sure what's going on, guys. I got bars. I don't know why I keep dropping.
They're not loving you. They're not loving you. But we got halfway through. You said 45 days. You said you mostly focus on selling, but if you had to buy, and then we kind of lost you from there.
If we had to buy, I'd still look at that 45-day window. I would say it might be easier to do somewhat of a call spread, a little risk defined, and you could straddle the current stock price, right? Like buy options in the same way of options. So I'm not even sure what Apple is trading these days. I haven't looked in a while, but let's just say Apple's trading, what is it trading? Like 170 or something like that? Geez, it's been a minute.
Hit 182 today, 182 and 3/4.
And you could straddle that 182 by buying like more of an in the money type call, say a 60, 65 call, and selling, say, a 30 delta call, buying a 65 delta call, selling a 30 delta call or 25 delta call. And that way you can straddle currently where the stock price is. And then it's almost like you're buying stock at 182 with sort of an upside, with your upside to the 30 delta. That's going to be your stop out.
Mr. Dan, same question for you, sir. Brockus is overwhelmed by the amount of options he's confronted with in Apple and Meta. Looking to buy premium, where do you think he should be dipping his toes in the water, sir?
Man, I'll tell you. Well, as far as the time horizon, well, first of all, I want to say that I love what Jermal said. The straddling that strike price with a debit spread. I love doing that because you can hedge off the theta and vega risk, and yeah, I love that. And as far as the time horizon, the one thing that I might like to add to that is all vertical spreads, not just credit spreads, but debit spreads too, have a very important time contingency, I would say. Whereas if you buy a 60-day option and 5 days later it goes up to the short strike, you're barely going to make anything, but if you buy a 5-day option and 4 days later it goes up to the strike, you're going to get pretty close to your maximum profit. So that's the only thing I would add to that is that think in terms also of just not just what your profit target is, but what your time horizon is.
All right, great stuff. Hard to believe we're already coming up against it here, but let's squeeze in a few more. We love to get as many of you folks as we can on the show. Listeners, let's go out to MLTZ, maybe Melts. A lot of Z's in the show today. Either way, he wants to know, when you guys were talking about wheels on your recent shows, how do you decide whether to wheel out or just keep the stock? Ah, yes, the wheel, Jermal. It's been a bit of a fascination for a lot of our listeners of late. We've done 2, 3, I've lost count, recent episodes just on this show of the wheel. We also did a whole episode of the Advisor's Option all about the wheel. So we've been talking about the wheel a lot lately. Maybe really quickly before we get into Meltz's question, Where do you fall on the wheel? Of course, selling the put to get into the stock, and then on the flip side, selling the covered call to get out of it. Are you a fan? Are you not a fan? And then B, if you are, or maybe if you're not even, how do you decide when you get the stock put to you, whether to wheel out of it or just keep it?
I'm a fan. I think it's a great strategy. I also think it's a great strategy for those who are scared of options, because it's pretty inherent. You can kind of it'll help you understand how options work and how to work with a stock, and probably how to be mad at a stock too at times, right? Like there's going to be times you're like, oh man, like I'm so annoyed that I got long stock. But at the end of the day, people think about it. You got long stock in an area where you wanted to. So it's actually a really good thing. Where do you wheel out? That's a good question. I mean, I think sometimes there are definitely going to be times where you just don't love the stock anymore. Maybe it wheels you out, right? So I don't necessarily know if there's any numbers that coincide with when you want to be done with it. I think if you're lucky enough, first of all, to get the stock put to you, and I say,
there he goes. Mr. Dan, I'll let you take over while I get him back, sir. What are your thoughts on when to wheel out of the stock, sir?
Well, my thing is that decision needs to be made before you even make the trade, before you even sell a covered call or get into it at all, because you should have a plan for, if you know that you want to own the stock, then you're going to construct a better wheel strategy that makes it more likely for you to own the stock. If you don't want to own the stock, you just want to skate on the put or the call or whatever, in this case, skate on the put, then you would construct a better strategy if you know, hey, I want to get assigned and own the stock, or hey, I want to skate and not own the stock. So, like, how do you decide? First, you decide. That decision is the whole impetus for entering into the wheel and constructing the trade.
I definitely concur with Dan. These are the kind of things you want to decide at the outset. That's why you're doing the wheel. Obviously, a lot of factors are going to play into that. We talked on our episodes about choosing oftentimes stocks with heavy dividend flows as a wheel candidate. So that's going to obviously dictate when and how long you want to hold on to that underlying there. So there's a lot of different factors that are going to come into that calculus. But if you're setting out on a wheel trade to begin with, that should be your plan. You should have that set up ahead of time. And if you do get the stock, you should know exactly how far out of the money. Or we talked on the advisor's option about maybe going in the money with the calls. A lot of ways you could play with it, having put spreads go out to calendars. We dissected the wheel just about every possible way you can there. But yeah, Meltz. There's no real hard and fast rule for this. It does depend a lot on the particular underlying that you are writing the put on to begin with and the characteristics there. All right, I think we do have Jermal back here. Let's get him to finish his thoughts on this before we lose him again. Jermal, sir, the wheel, your thoughts on it, and also when you have the stock and you're sitting on it, you got it put to you, what do you like to do then?
I'm looking for a nice upside strike to sell against it, and with the hopes that at some point it'll hit it. That's the best thing that can happen for you.
All right, listeners, that is going to do it for this episode of Options Bootcamp. Man, time flies while we're having fun here. But before we go, Jermal, if the internet gods are smiling upon you once again, sir, and again, this was fun. We'll have to get you into the Tasty Trade hot seat more frequently, hopefully when we can hear your complete thoughts next time, sir.
Hopefully so. Thanks, guys. I'm not sure what's going on.
But
I'm literally looking up issues.
But before we
iPhone 15 calls.
Before we go, Jermal, if folks are intrigued, I know you guys are cranking out content over there all the time in the land of Tasty. If folks want to kick the tires for themselves, A, what can they look forward to from you folks? And B, where should they go to learn more?
Go to tastylive.com. We got all our content up. I have a show, Engineering the Trade, 1:45 p.m. Central to 2:15 p.m. Central every day except for Wednesday. So, yeah, join in anytime. Check us out. We got a ton of stuff.
There you go. Check him out over there in Tasty Live. Or you can go kick the tires on the broker for yourself, tastytrade.com/pod. The place to go to learn more. Or as they say over there, see for yourself, genius. A fun little tagline there. And Mr. Dan, of course, if folks want to kick the tires for themselves over there in the land of MTM, where should they go? What should they do?
Yep, we'd love to chat with you. MarketTaker.com, 2 T's in a row, and join our community for free and be a part of that. There's a lot of great free content and interaction. We'd love to have you.
MarketTaker.com. Don't forget the second T for Theta, listeners. That is going to do it for us on the network today. Hopefully you enjoyed your rare double dose. We had a rare live episode of This Week in Futures Options. This morning we were joined by our buddy Blue, the head of research over there, chief economist over there at CME Group, breaking down all of his fun research for the year on all things CME. So no TWIFO tomorrow because you already got it live today. It'll be hitting the podcast network a little bit later today, right around the time that this show is hitting the network. Of course, we're back again tomorrow. I will be joined in person by our buddy, the Flowmaster. We'll be recording over there at the SIBO for the option block, so that should be fun. Friday, of course, Volatility Views, noon Central, 1 p.m. Eastern. Then after that, for all of you pro folks, we're coming back to break down a crazy week from an unusual activity perspective on options oddities. That will be at 2 p.m. Central, 3 p.m. Eastern, or, of course, for all you pro folks, you can get it on your pro podcast feed as well. And if you haven't kicked the tires on the pro yet, what are you doing, listeners? Only one place to go to learn more, theoptionsinsider.com/pro. You get a couple of exclusive shows every week. You click that join button, you have 250 episodes waiting for you. I think the second you hit join, giveaways, live streams, you can heckle us right now live on Boot Camp, all the other shows that we do, all sorts of fun, theoptionsinsider.com/pro. Going to do it for us on the network today. Back with all the other content I just laid out. Then we're back again next week and next Education Wednesday, another episode of Options Boot Camp. Stay safe out there, everybody.
Options Bootcamp is brought to you by tastytrade. Ready to shred your paper trades? Then trade at tastytrade, the broker that gives you what you need to make your own way. Get smarter every day with options education and research tools. Analyze your risks clearly with a potential profit and loss graph. Chart your way with hundreds of indicators. Make the numbers make sense and find the opportunities only you can see. Trade it with fewer clicks on an easy-to-use platform. Mobile, desktop, web. Supported by a trade desk with decades of combined experience. Stocks, options, futures, and more. You choose, you trade. Get what you need to make smart moves. Go to tastytrade.com/pod to see for yourself, genius. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.